Hello everyone, my name is Deepak and I'm a tax code advisor. Today I'm going to talk about how much money you can make with the home-based childcare business. Now, if you guys remember yesterday, I posted a video about how to start a home-based childcare business. And in response to that, some of you guys have sent me some questions. So I thought instead of replying to each one of you guys separately, maybe it would be better off I just make a video and post my answers to those questions. By the way, wonderful questions. If you have some questions, you're more than welcome to send those to me. Now, I learn how to do things from my clients. So when people tell me, this is working for them, this is not working for them, I'm able to help my other clients avoid some of the silly mistakes. I've been learning for almost last 20, 30 years and gather a lot of information about different kind of businesses. And child care business is one of my favorite business. Somebody who is working for, let's say, 50 or $60,000 a year, they really need to consider home-based childcare business. The number one reason is because simple math. You already have a property. You already are paying your utilities. So you already have this facility. And all you have to do is ask in your neighborhood who needs some help with childcare. Maybe 5 people, 6 people send their kids. And if you charge those people, let's say $1,000 a month for 6 kids, that's $6,000. For some of you guys that might not sound like a whole lot, but somebody who's earning a $50 or $60,000 working a W-2 job, that is equivalent to almost earning maybe $90 or $100,000 as an independent business owner. So does that make sense? Absolutely. And I'll explain to you in today's video exactly how does that math works out. Now, some of you guys, maybe you have a bigger space and you can take on more kids. Maybe you can take 10 or 12 kids. So now we're talking about $120,000, $130,000 a year income, which is pretty reasonable. So anyhow, today I'm going to talk about, what is your potential, how much money you can make, but more importantly, how much money can you put in your pocket and how would you do that? How would you maximize it? How would you use this extra income that you have just generated and turn it into a massive wealth? How can you use this to your advantage? How can you build up a retirement plan? How can you build up an education plan for your children? How can you buy real estate with this? How can you plan for your kids' education? All of that is possible just with a home-based childcare business. And that is what I'm going to explain to you today. So let's get started. All right. So we need to start with the top line, and then we are going to remove some expenses, and then we're going to calculate how much money can you make. So first thing first, you need to start doing some research in your area. Maybe you call some of the other childcare centers that are opened already and been operating for a long time. I like businesses that's been there for at least 3 years or more. And you call them and you find out how much they charge for childcare. In matter of fact, if I were you, I'll probably call every single childcare center in my 10-mile radius and try to get the pricing from them. Second thing I'll find out is what age kids do they serve? Because, somebody might charge more for, let's say, a toddler versus they might charge less for somebody 5-year-old or 6-year-old. So find out when they talk about the pricing, what does that mean? Also find out what kind of discounts they might have available. This will kind of give you an idea about what kind of facilities are these. If I were you, I'll probably make an Excel sheet. I'll write down all the different competition that is in my area. And then on the other side, I will write down the numbers, how much they charge, what kind of kids they serve, what age group. So maybe they have different age group, how much they charge for different age group, for number of hours, how much they charge for 4 hours, 2 hours, 6 hours, 8 hours, what programs they have available. Do they offer anything other childcare? Is there any additional service? Are they offering food services? Are they offering pick up, drop off? Are they offering classes? Are they offering summer camp? You want to find out about your competition as much as possible. Now you're saying, wait a minute, Deepak, why are you asking me to do all this legwork? All I want to know is how much I can make. Well, how much you make is largely dependent on what your competition is charging. Because let's say I want to start up a daycare and I want to charge $5,000 a month. That might not happen if all the competition around me is only charging $2,000 a month. So knowing your competition pricing is extremely important. So don't skip this step before you start doing your calculation. You need to come up with an Excel sheet and figure out what is possible. Now that you have a good understanding as to what's happening in your competition, now you need to kind of build your own spreadsheet. Okay, first of all, maybe you don't want to start by serving all the all different age groups all at once. Maybe you want to divide that up a little bit. Maybe, for example, maybe you only want to do less than 3 year olds, or maybe you only want to do from 3 to 6 year old. Put them in age group. Especially if you're brand new, I think this strategy will work very well for you. Once you do that, you don't have to buy all bunch of toys, right? Now you're only buying toys, equipments for 3 to 6 year old. Versus if you're serving all diverse age groups, now you're buying all kind of different toys. So it kind of reduces your cost. Second thing I would do is I will go visit some of these centers and see what kind of system they have set up for that particular age group. And this should give you an idea as to what kind of stuff you need to buy. You see, you don't need to reinvent the wheel. Now, if you are our client or you are planning on becoming our client, then we are going to provide you with a blueprint. We will tell you, what we have seen out there, and you start with that list, and then you can always add on to it. You can always go back and say, oh yeah, you know what, this was missing on the list, and you can add on to it. And do let me know in my in comments, or send me a message and let me know, hey, maybe I should update that list, and I'll be happy to do that. So once again, to figure out how much we are going to invest in a facility, I think it's very helpful if we know what our competition is doing. But at the end of the day, you want to ask yourself, what are parents paying you for? That's the real question, right? And as a parent, I can tell you that I'm paying you to deliver an experience. So an experience is not something you can actually see. You have to feel it. So when you go to these other training centers, you need to see what kind of experience these training centers are delivering. Does that look good to you? Do you see any problems with it? And write down in your notes. That way you can offer the best experience possible at your facility. You see, there are only a couple of ways to build a successful business. One way is that I offer the same experience as everybody else is offering at the cheapest price possible, and I can grow my business. Second part is I can uh, improve the experience. I can add something to my experience, and I can charge customers more for that experience. I'll give you an example of my own business. One option is I can simply tell my customers, hey, I'll help you out with taxes, just like any other tax professional out there. And that'll be just fine. I can charge dollar X for it. But I can do a lot more. I can say, look, I can also help you plan for your retirement. I can also help you plan for your education. I can help you set up a small business. And not just set up a small business, I can coach you, guide you. I can provide you blueprint. I can provide you marketing templates. I can provide you, business plan. I can help you out with your operating procedures. So I can do a whole lot for a client. Now, what does that do for a client? It's a better experience. They don't have to go to 20 different people to get all this information. They only work with one. Number two, they get a better price, right? And it's more profitable for me because I can make more money from one customer. So it's a win-win situation. You want to do the same thing. You want to be able to offer the best experience possible. So in order to do that, you need to know what kind of experience other business owners are providing to their customers. Maybe you have to go visit them 2 times, 3 times, 4 times to really figure that out. Maybe you need to stand outside that facility when parents are dropping the kids off, and or when they're picking up, so you can interact with them. You can talk to them. You're like, hey, look, I'm trying to send my kid here. What do you like about them? What is one thing that's really driving you? And if they want to leave, why do they want to leave? This will give you a good idea as to what kind of experience parents are having by sending their kids to those facilities. All you have to do is deliver a better experience. And if you're able to do that, you will continue to generate revenue out of that business. Okay, so now you know the basics as to how to calculate how much you can really charge your customers. So that's why I didn't really give you a specific number, because number could be, for example, let's say you say, you know what, Deepak, all the competition in my area is offering a wonderful experience. They got nice little, locations. They got beautiful decor. They got brand new toys. These people have spent 50, $60,000 setting up the shop. I don't have that kind of money. Okay. No worries. All you have to do is reduce the price, right? So if they're charging $1,000, maybe you charge 600 or 700 bucks, because eventually you would have to outbeat them in experience. But in the beginnings, because you cannot do that, and you want to get into a business, so there is a cost to getting into business, and that cost is to reduce your price. So now that we know the number, you are going to figure out how many kids you're going to accommodate. I would recommend that you reach out to your city and ask them that if I'm setting up a childcare center, what's the maximum number of kids I can have? And you take that number and maybe you give yourself a discount. You say, look, if let's say if I can have 12, so maybe I will, assume that maybe at a given time I would have 10, and I'll use that number. And I'll say, let's say if I can charge $1,000, then that's $10,000 income per month. That means the maximum I'm going to make in 1 year is $120,000. So I'll start out with that number as my top line. Okay. Now, before we figure out how much we are going to pay ourselves, we need to calculate some cost. Now, some cost is invisible, some cost is visible. For example, you're already paying your utilities. If it's a home base, you're already paying your utilities. You're already paying your rent. So do you really need to pay yourself all that again the second time? Probably not. So but that is a cost, but you might not count it. So that's an invisible cost. I'll put it in a separate column so that way I can really figure out the true profitability of my business, but it's not a direct cost to me. That's number one. Number two, I'll figure out what is my direct cost. So what kind of direct cost you can have. As a business owner, you will have some accounting costs. You will have some insurance costs. You probably would have to refresh the toys every now and then. So I'll probably calculate whatever the total number of toys is. Let's say you have to spend $5,000 on toys. And maybe you need to change those toys every 3 years or 2 years. I'll let you pick that number, whatever that looks like, and basically divide it. So let's say if it's $5,000 and the toy is going to last 5 years, then I'll say like it's $1,000 a year. So I'll add that to my fixed cost. You're probably going to need a telephone. Now, more than likely, you already have a phone, so you can use it. So once again, it might be an invisible cost, but you, as a business owner, you should really track that. So you probably have some cost for telephone. You probably need some internet, so there will be some cost for that. You probably need some sort of POS system, some sort of bank, some sort of credit card processing, some sort of website. All of those are real costs. So I'll figure all that out. Now, as part of our program, once again, we will include all that and give you a template, and wherever we can save you cost, we will be happy to do that. For example, I have some IT staff that I use on regular basis, so I pass those savings on to my clients. You're happy to use those people. You don't have to pay me, you just pay them directly, but there will be significant cheap, so you don't have to go find all the people to begin with. So that's so you need to figure out all the costs that are going to be involved. And now that we know what our fixed cost is, now we can take our top line revenue and remove my fixed cost, and I'll come up with a dollar amount. So let's assume our fixed cost is $10,000 a year. So I made $120,000. I take $10,000 out. I have $110,000 of gross profit at this point. Now what I want to do is I want to look at any variable cost. So not the fixed cost, variable cost. So what kind of variable costs you might have? So let's talk about that for a second. So payroll. If you need to hire somebody, if you need to hire employees, maybe part-time, maybe a full-time, but obviously that might more or less will be a variable cost, especially in the beginning. Maybe you don't use them as much. So that would be your variable cost. Any kind of food that you might provide. So there might be some variable cost there. You might also provide some travel here and there, meaning you're picking or dropping off the kids. There might be some variable cost. But for time being, let's assume all that cost is minimum. So maybe let's just say that the maximum cost you'll have is really for payroll. So we'll just say maybe let's say you're paying about $20,000 a year in payroll. Okay, so I was doing a quick math here. So if you're paying somebody $20,000 a year, that comes out to be roughly about $400 a week. That's what you're paying. So question is, what can you get? So I don't know what the pay rate in your area is. Maybe $400 a week can get you some a part-time help, maybe a little bit more than part-time, maybe in some cases even a full-time help. But figure that out. Now let's just say if we increase the number to $40,000 a year, or maybe you have two part-timers, now you're paying $800 to that part-timer. All right. Now, before we calculate our number, so let's assume that we only have a fixed cost of, let's say, $10,000 and maybe $20,000 of our payroll cost. So we have $30,000 of cost. So you might think, hey, out of $120,000, we have $30,000 of cost, and now we are sitting at a $90,000 income per year. Not so fast. So what we want to do now is we want to calculate your taxes. So first of all, we will have some payroll taxes due on that salary that you're paying, whether it's a 20,000 or 4,000. The rule of thumb is I like you to account for roughly 10% of whatever you're paying in taxes. So if you're paying 20,000, put aside 2,000. That's basic, simple rule of thumb. Now, on top of that, you're going to have some taxes due for yourself as well. So as a business owner, how do you take the money out from your business? You take it at a distribution. So depending upon what your income looks like. So in this case, your income seems like going to be almost $90,000, maybe $80,000, somewhere around that. In that case, what I will probably do is take some part of your salary as a W-2 income from your own company, just like you if you would have worked for somebody else. And rest of it, I will take it as a distribution from your company. What that allows me to do is significantly reduce the taxes that you have to pay. So I can save quite a bit of it. However, I do want you to account for it. So let's just say if that payroll looks like $20,000 or $30,000, I still want you to account about $2,000 to $3,000 in payroll taxes for that money. So let's say if it's $30,000, I'll probably put like more like $5,000. If it's $20,000, maybe I'll do $3,000. So something like that. So when you work with us, so oftentimes people do all this math 6 months after they have set up, and by that time they have really screwed up their finances. We like to do all this math before people even open up their business, so they're accounting for all this cost. So what we want to do is at the end of the day, we want to figure out of our revenue, what percentage of that should I put aside? And the only way to do that is if we look at these numbers in aggregate for the year. Why? Because once you have a childcare center open up, maybe first 3 months you don't have as many kids. You might see it as a cyclical business, and you might not see constant $12,000 a month of revenue coming in. So we need to see it as a big picture, and we need to say, look, we need to really save this much every single month to make this work. All right, so we talk about payroll taxes. Now, in addition to that, you would also have income taxes due. Now, this is where we have a lot of creative planning that we can do. So like I said earlier to you, right, it's really about why are you starting the business? Is it just replacing your income? Because if it is replacing your income, what that means is you want access to your funds. You want maximum access to the fund. So what I need to do is not really take any of that money and invest it anywhere else. For example, 401k or some sort of defined pension plan or some sort of education plan. We can't use money because you need to use it to do what you need to do. So if that's the case, then what we are going to do is we're going to say almost 40% of your total revenue based on current numbers that we just did, we are going to put it in a whole separate account. So anytime our revenue comes in, So and let's talk about that for a second. How does the revenue come in? Are you going to charge your customers monthly? I recommend weekly. It's just a better cash flow for you. Um, and charge in advance. If your customers are willing to pay you 1 month in advance, even better. If they're willing to pay you 6 months in advance, better. If they're willing to pay you 12 months in advance, even better. Why? Well, because you can take that money and invest somewhere. Maybe you put it in a stock market. Maybe you put it in some sort of savings account. Maybe you invest into real estate. Whatever your favorite thing to do is, I'm not going to tell you what to do, but whatever it is, the idea is you can use that advance money to pay for things that you like to pay for. So I'll give you another example. I might go to my landlord and I might say, you know what? If I'm renting this place, I can say something like, hey, what kind of discount can you give me if I pay you the entirety in advance? What happens when you're paying the landlord in advance? First of all, you're reducing risk. Second, your landlord feels really good about you, that it's a good tenant. And number three, he can use that money and invest somewhere and make more money. So there's more than likely landlord will be willing to give you a discount if you pay in cash. Similarly, maybe you don't have money to buy the furniture and toys that you need to set up your business. If somebody pays you in advance, you can use that money to buy all that. So that way, you're not coming up with money from your credit card or your other savings account and have to withdraw by selling something else or anything like that. So charging customers in advance is a wonderful strategy. Look to do that. Now, most important part, you need to have proper terms of service defined. If you don't have terms of service defined, you can get into trouble. So again and again, especially an established childcare business facility, when they come to me, and mostly they come for business questions. I mean, tax questions, and then I have to kind of convince them that let's talk about your business as well. And when I do, and I ask them, let me take a look at your terms of service so I can make some recommendation what might be benefit. They never have it. There's no terms of, or if they have it, it's like 4 lines. Doesn't define anything. It doesn't limit their liability. It doesn't define what the service is. It's of no use. So we need to have a good terms of service defined. We need to have a good agreement. We need to have a good liability waiver. So we got some paperwork to do. But assuming you all have all that, you give customers a couple of options that, hey, look, if you pay the entire year in advance, I'll give you this price. If you do 6 months, I'll give you this price. If you do month to month, this price. If you do weekly, it's this price. So the smaller the payment, higher the price. So it's customer choice what they would like to do. And you'll be surprised how many customers will decide to pay you more. So that's how you increase the revenue. Now, second thing I want you to do is have multiple bank accounts. Maybe not like in a different banks, maybe in the same bank. If your revenue was, let's say, 500,000 or $1 million, then maybe I'll have a different strategy. But if you're a small home-based business, your revenue probably going to be roughly about anywhere between, let's say, 50 to $200,000. So if that's the case, I'm comfortable with one bank, no problem there. But you need to have two bank accounts. Anytime a revenue comes in on a daily basis, transfer 40% of it into your savings account. Or maybe you have two checking accounts. Maybe you transfer from one checking account to the other checking account. So one checking account is what's available for you for your personal use, and the other one is for operations. Okay, and just wait. You're not the one that is available for you to use. You're not ready to take the funds out of from that account either. So not there yet. Sorry about the lighting. Um, I'm doing everything live, so it's not. It makes it a little bit hard, and nobody else is here to manage that. So you got one bank account where the money comes in from customer. And by the way, talking about customers, so now you also have a credit card processing. So don't forget that. Typically, credit card processing can cost you anywhere between 3 to 5%. Obviously, my customers, we will try to connect with people where they give them the cheapest price possible. At least what we have found. So we'll be happy to pass on those contacts to you. So that would be some saving, but still, we should account for that cost. So that's one thing to keep in mind. So what I like my clients to do is set up credit card processing and ACH. and option to take check. You should be able to offer your customer all options. Sometimes I see clients lose business because they become, I'm only going to take cash, or I'm only going to take check. I'm only going to take this or that. Your customer want choices. So don't ignore that. Remember what I said earlier. It's really all about the living experience. So if at any point your customer feels that they're not able to get that kind of experience, it's just not going to go good. So we want to be very, very careful about experiences. So if I have to spend a little bit extra money on an experience, I'm okay with that. All right. So we have the money come into bank account. We take 40% of that and put it into a separate account. We're going to use that account to pay for our fixed cost. We're going to use that to pay for our, payroll taxes. We'll use that to replenish our supplies, to replenish our toys and whatnot. And now we are left with 60% of our income. Out of that 60% of income, I want you to move 20 to 25% of that income into a business savings account. Okay. Business savings account, meaning it's available for you to use for business. But the idea is that you grow this money so you can grow your business, because we want you to get to 300, $400,000 revenue. But that would not happen if you don't set up your numbers in advance. You're not saving enough to reinvest back into your business. What happens if you have 2 bad months, or, if something, where we might have, shut down for a week or 2 weeks or a month, that can get you in a lot of trouble. So we want to have some savings around that. Sometimes I see clients get stuck. There was a client in their area, there was a fire. Another client, there was a riots in that area. There, burglaries and all kind of stuff happens out there. So you need to be prepared for that. So 20 to 25% of whatever is left over goes into the account. So now we have 60% of roughly our income already accounted for, and that leaves me with 40% of my income. That 40% is most likely is what you're going to take home. But so if we go back to the math and we say, look, we are going to have that out of $120,000, we are going to be roughly $50,000 is gone in all that stuff. That means I'm left with $70,000. First of all, $70,000 is not bad at all for a home-based business. That's one thing. Second thing is, most of that income is most likely going to be tax-free to you. So let's talk about that. What happens is, as a business owner, we get to write off a lot of expenses. So all these expenses we wrote off already. So all this other money, we wrote off most of it. So any payroll that you did, any supply that you bought, all that is done. But there are other things that we have not written off just yet. So for example, you have not written off the cost of your mortgage, or if you're renting, the cost of that rental. So let's make a guess. Let's say if you had a property that you're paying $5,000 in mortgage or $5,000 in rent, and you're using half of that property for your business, that means we get to write off $2,500 a month, almost $30,000 I can write off. So I don't pay tax on 70,000. I pay on tax on 70 minus $30,000. So that's one write off. I can, maybe I use car to pick up and drop off kids or meet with parents or for business. As long as I use the car for my business, I get to write off my car. So maybe I have a car payment, or maybe I bought the car myself. I put some gas in it, or maybe I use mileage. There are different ways to do calculations. I'm not going to get into all that, but I can probably write off anywhere between 300 to, let's say, $1,000 a month, depending upon what kind of car it is and what kind of activities I'm doing, as a car expense. So that's $5,000 to $10,000 a year of car expense that is gone. I can also use this business to fund my 401k account. I can set up a solo 401k. I can put $50,000, $60,000 into it. So I can almost literally put entire money into that account and pay almost no taxes. So only tax I would pay is going to be payroll tax on the payroll that I ran for myself, which is going to be roughly around 15%. So let's say if I ran a payroll for, $30,000, that might be $5,000 or so in taxes. And that's about it. And rest of it is I'm getting to take home completely tax free. Now compare that to somebody who's in a W-2. In order for somebody to make $70,000, they really need to be earning almost 90 or close to 100, depending upon which state they are in, to make the same amount of money as you are making as a business owner. So it's very nice. It's very lucrative in my opinion. I mean, I remember when I started my first job, I was making $5 an hour. I wish somebody would have taught me something like this. And I'll talk about a lot of other businesses as well. This is one of my favorite, but there are a lot of other businesses that you can do from your home that can very easily replace 50, $60,000 worth of income. So there's so many people. Sometimes I meet with teachers who are struggling. Sometimes I meet with people who are working in grocery stores, people working in driving Uber, stuff like that. And it's all good. I have no problem with all those W-2 jobs, but all I'm saying is if you can spend your time building your business, you are in charge of your own business. You can grow that business and build into something big. But more importantly, I think you'll build wealth. As I said, there's so many strategies I'll be able to implement to help you get the most out of your business. So anyhow, that's how we run the calculation. Now I kind of give you a brief overview today, but if you're part of my consulting program for home-based childcare business, then we'll walk you through some specific examples, how to do those calculations. We'll provide you with the template and everything. So if there's anything I can do to help, definitely reach out to me. The discovery call is absolutely free. You can just book it by clicking on the link so you get to know more about the program. And if you're ready to enroll in the program, just let us know at the discovery call and we'll get you going. You'll have access to us for the entire year. We want to see your business successful. You don't need to go find somebody to help you out with retirement calculations separately, your business calculations separately, your taxes separately, or to design your business plan, somebody else to help you out, coach you how to do things. You got it all here. You don't need to go to 50 different places. All you got to do is connect with me, let me show you how to do it, and just go do it. I cannot stretch enough that if you work on yourself, sooner or later, you're going to become a successful business owner. All you have to do is get started. So please don't hesitate to reach out to me. And if you have a comment, questions, concern, idea, something that I missed, something I should talk about, then put it in the comments and I'll cover it in the next video. Thank you.